Okay, hello everybody. Welcome to Korean Atlanta Mentorship. And in this video, we're going to go over a scenario with Velocity Banking only using credit cards. Now, I know there are a lot of people out there who are like using credit cards and are afraid to do Velocity Banking because you think like maybe you need a HELOC or a personal line of credit. Now, there are advantages to having both types of lines of credit, right? There's disadvantages to using a credit card. So, for example, I can't pay one credit card with to another credit card unless I'm doing a balance transfer, and I can't use credit card number one to pay credit card number one's bill, even though you could do that with the home equity line of credit and a personal line of credit, right? So there's always advantages and disadvantages to using either one, but let's just assume that in this situation, we only have credit cards, right? So some of you are afraid to do Velocity Bank because you think you need a home equity line of credit. Simply not true, okay? What we have to do, same two requirements for every single Velocity Banking scenario, and I talk about this right here, is that we need a budget, right? We need a budget, which we pretty much have, and we need to complete it. And then we need to use a line of credit as our main operating account, right? So a line of credit is a personal line of credit, home equity line of credit, and guess what? Credit cards fit into that category, right? So we have three credit cards here, and what we have to do is just use one of them as our main Velocity Banking account. Okay, so for me, my criteria for what I'm going to use as my main personal Velocity Banking account is something, a line of credit that has a high limit or the highest limit and the lowest interest rates. And kind of like a combination of two, right? So for me, that's credit card number two. So, oh, I'm sorry. So let's assume that we have about $30,000 or a limit on this credit card number two, and we're using about 25,000, right? And this is going to be a 29% interest rate, so I already put it here, 30,000. So what we're going to do is we're going to complete our budget, and our budget's going to be a little bit different, right? Because we can't put our entire paycheck into the line of credit because we have to put some things in cash, okay? But let's just go ahead and do this. And so um, let's just do this. So expenses on credit line. So again, the whole strategy of Velocity Banking is that you put your entire paycheck or as much as possible into that line of credit, you take your expenses down, and then your cash flow will be used to decrease the line of credit, right? And so here's the cool thing about Velocity Banking, whatever you were using as our main account, okay? So we're gonna use credit card number two. This is gonna be zero, okay? Isn't that cool? And so what we're going to do is instead of putting our entire paycheck into the line of credit, what's going to be our paycheck minus our credit card bills because we have to pay those in cash, right? So 133.33. So that's going to be going to our credit card. And then our expenses are these things that we can pay with the credit card. Let's assume for this example, we can pay rent with the credit card. So that'll be 2,700. And then what's our cash flow? So this is going to be savings. Savings is zero. In Velocity Banking, we never have savings, right? In general, although I've heard some people say have 12 months of savings, but if I'm having 20% credit card debt or 30% credit card debt and only making 3% savings, I'm just going to get rid of the savings. At least that's my opinion. Okay, so now our cash flow is about 1466. And another thing that we can do is we can actually balance transfer this 5K to this 30K if we do maybe a couple of payments, because if we do 5K right now, we can't actually transfer it because of the associated fees, and we're probably going to go over this $30,000 credit limit, right? So let's just do this. This is month zero. Now, what's our balance right now? It is 25,000. 25,000. So 25,000. And one of the things that we have to do, because technically, because we're already carrying a balance, right? This isn't technically month zero. Usually, when we say month zero, it's like the first time you do it, but then you're gonna generate the first statement on month one. But let's just do this. I'm gonna say that the interest is 26,000. That's probably the average daily balance times the interest rate, which is 0.29 divided by 12. Okay. Oh, I gotta put an equal sign. Okay. And let's go ahead and make this a currency, make it a little bit more spiffier in English, right? Okay, so now what we're going to do is just subtract this. So what we're going to do is take these two numbers, add them up together. So equals J2 plus K2 minus our cash flow. So what's our cash flow? Our cash flow is 1466.67, 1466.67, right? And then we're going to do a formula for the interest. So if you don't know how the interest is calculated on credit cards, they just take the average daily balance, multiply by interest rate, right? Divide by 365 and multiply by the number of days in the month. But we're just going to go ahead and do this. Take the averages of these two numbers, which is like the midpoint, multiply it by the interest rate. Oh, I screwed up. Multiply it by the interest rate, 0.29, and then divide it by 12, which is essentially the same thing we talked about last time. Okay, so now let's just do this. I think after one payment, can we move this $5,000? Let's just check, right? So $5,000. Let's move this here. Although after one payment, it's probably going to chip down a little bit, but let's just do $5,000 anyway. So $5,000 plus the balance transfer fee of 3% times 0.03. Is it under 30? Let's check. Barely under 30, barely. Okay. So now what we're going to do is this is going to be 0, right? Okay. So now let's just do this. So it's going to be 5,000 minus 700, and our new cash flow is 1,600. Okay, so 1,600. So 27,000 is just our credit limit expenses that we're paying with this, and 1,600 is our cash flow. So we still have that one credit card we're paying off separately, but we're using this as our main Velocity banking account. So now what we do is we just kind of copy and paste, but with our new cash flow of 1,600. Okay, so now we're going to copy and paste this and this and this and this and this. And here, if we can consolidate this credit card 1 and 2 and maybe do a balance transfer, it'll probably make it easier to manage because look at that cash flow that we have, or that we can cover $700, right? So it's up to you if you want to just go straight to 0 here and then use this as our main Velocity banking account, right? That just depends on you. And we could just do it that way too. So either way, I think is perfectly valid. Sometimes I do like to do balance transfers if I feel like I can get immediate cash flow at the very beginning and consolidate debts. Okay, so now we paid off. Okay, so equals L3, no, L4 plus 1. And how many months did it take us to pay off this debt? 26 months to pay off 30K. Okay, so let's just put milestone here. So let's just do this. Milestone. And that is 30K, 26 months. Okay. Now we have this final debt here. So what we can do, right, is we can switch Velocity banking accounts at this time. So instead of using this one, since this is essentially 0, why don't we use the 20K at 30% as our new account, right? So this is what we're going to do. And actually, let me get the interest too. I'm pretty sure it's going to be a sizable amount, a couple of grand, but let's see. Is it a big meatball? 10 grand. Wow. So 10 grand. And how much is 26 months? 26 months divided by 12, 2.16 years, right? So 2.16 years. Okay, so let me just put 2.1 years. All right. Okay, so now what we're going to do is, let me just do this. So now what we're going to do is that we're going to use this as our Velocity banking account. And then let's go ahead and erase this. Okay, so let me just go ahead and erase this. So what's our balance now? Well, we'll have to check after 26 payments of this 20K at 30% what it is. So let's go ahead and do that. I like using Bankrate to figure out the minimum payment calculator. And then at 30%. Okay. And so now let's figure it out. All right. So now let's go ahead and figure out 26 months what the balance is. It's about 15 grand. All right. So 15 grand. And So we paid about 5K, most of his interest. Yikes. But take a look at this. Now this is zero, right? So now this is zero, and now we have the full 5,000 available to us. And look at this. Our cash flow is 2,300 now. Isn't that insane? All right. So now what we're going to do is put that balance here of 15 grand. So 15 for, okay, right. And how much interest? So what's the interest here? So it's the average daily balance between this one and this one. So let me just do this. So equals 5400.86 plus the one before it, 15556.43, 15556.43 divided by 2. Okay, wait a minute. One more, too many extra fives. Okay, and then I multiply it by the interest rate, so that's actually 3.3. And I have to change this. This should be 30%. And then I got to divide it by 12. So that would be divide by 2, divide by 12, it'll be divide by 24. And that'll be the interest for that month. Okay. And then now let's go ahead and calculate the average daily balance for the next months. So equals J2 plus I2, no, HIJK. I don't know why I'm forgetting how to do basic alphabet, but minus our cash flow of 2,300. And then this one is our average daily balance. So we're going to do, no, we don't want sum. We want average between these and this, multiply by 0.3, and then divide by 12. Okay? And then now we just rinse and repeat. So what are we going to do? Just copy and paste and see how long it takes us. Okay? And now this will be 0. Let's see how much interest we paid. So let's go ahead and sum it up. About $1,800, right? And it took us about 8 months. So I would say 11 grand in total. So in the beginning it was a lot just because like we were just making minimum payments on this big credit card. But once we recovered our cash flow from these two cards to 0 and then did this, then we paid it off in no time, right? So now it's 50K. And how many months? 8. So 26 plus 8, right? So 26 plus 8 is 34 months. And what's 34 divided by 12? That's 2.83 years. 2.83 years, right? So, wow. Okay, great. So, yeah. So that's pretty much it for Velocity Banking. And so you see how, yes, it was a little bit more complicated than it should have been. But if I had a home equity line of credit, I'd dump all these like credit card bills into the home equity line of credit and just be done with it. But because of the restrictions of the credit card, we're going to have to make a few adjustments, right? And in the meantime, while I'm paying off these debts quickly, I'd probably get a personal line of credit when I don't need it, right? Because there's a saying that banks only lend you money when you don't need it, right? All right. So that's pretty much in today. So we paid off 50K of debt, 2.83 years. Look at how little we were working with. You know, it's not like $100 a month, but we're working with 1,000, less than $1,000 a month every month, and then we just paid it off in about less than 3 years, $50,000. So good job, awesome, everybody. All right, well, that's it for today. Happy, what day is today? Thursday. Have a great day, everybody, and we will speak next time. And also, plug for the group if you're interested in joining our group, learning about Velocity Banking, as well as learning about real estate investing, financial literacy. Go ahead and click the Google form link below. Other than that, speak to you next time.